so many of these services are under the control of the ANC. It is going to reflect on the ANC when those services continue to decline and break down, and also have an impact on employment and incomes in South Africa, as has been the case over the past 15 years or so.
Welcome back to the Centre for Risk Analysis YouTube channel for 2023. Happy New Year to all of you. Hopefully you won't hold it against me for giving you this message too late in the month, but we look very much forward to having you with us this year as we continue to provide you with weekly analysis, insight, commentary, and various bits of news analysis from our range of in-house and external experts. Kicking off this year, I'm joined by the director of the Centre for Risk Analysis, Dr. John Endres, and we're going to unpack what we expect to come up this year in South Africa, as well as globally. We're going to try and isolate those key points that we think you should look out for as you try and navigate what is undoubtedly a very interesting time in which to live, if I can put it so mildly. So John, just to start off with, we had the ANC's elective conference in December last year. President Cyril Ramaphosa re-elected, as was widely expected, as we also forecast, despite the challenge from former Health Minister Dr. Zweli Mkhize. What do you think for the ANC going into this year as we head towards 2024 and the national elections? What do you foresee for the party's fortunes?
Yeah, I think Cyril Ramaphosa did quite well. We did forecast that he would be a shoo-in, being re-elected. But then, of course, in the last days before the election, there was a bit of turbulence around Phala and the question of whether he would maybe resign out of shame. But he was prevailed upon by his colleagues to stick it out, fight it, and keep in the running. He stood for election and was elected, I think, quite comfortably, certainly a lot more comfortably than he was in 2017. And my sense is that the result of this election is to strengthen the president, certainly within the party. What effect that has on the ANC's standing in the broader electorate is a separate question. But within the party, I think Mr. Ramaphosa is quite firmly in the driving seat, and he is in a strong position to execute his agenda. I think it would be a mistake to believe that agenda is going to be extremely reform-oriented. I think it is going to be an agenda that will be marked, as have the president's past actions, by adherence to the National Democratic Revolution, and that includes things such as expropriation without compensation, stricter crackdowns in terms of race-based legislation, and overall quite a dirigist, interventionist approach to the economy and to markets.
We've got, of course, the prospect in 2024 of coalition governments, maybe a national coalition government taking over. What do you think for parties like the DA, the EFF for this year? Do you foresee maybe more of a focus on local municipal issues versus those national issues as they try to get support going before 2024? Maybe we won't see the spotlight on national figures so much as local figures as they try to really get their bases motivated, as it were, maybe even Action SA.
I think that is going to be very important this year. In your opening remarks, you said that this was going to be a turbulent year. I think that is true, both for economic and political reasons. So we are facing elections next year in South Africa, and we know that the economy isn't doing too well. Eskom has been taking a lot of strain last year. We had long periods of stage 6 load shedding, stage 4 load shedding, and I think this year, unfortunately, is not going to be much better. And the impact of that on the economy is going to be negative. It is going to stifle any economic growth that might desire to pop its head above the parapet. That's going to be taken out immediately. And that, of course, makes things more difficult for the ANC as well. I think in terms of the opposition parties, they will now need to jockey and position themselves in the run-up to 2024. I think that many of the opposition parties have realized the importance of coalitions and being able to work with other parties. We saw a lot of turbulence around that last year in some of the municipal governments. I think that is going to continue this year, and especially in councils where the DA's involvement or role in a government is marginal, are going to be at risk of being shot down. So certainly in Johannesburg, I think we're going to see a lot of to and fro, and that DA-led coalition might well find itself out of power once again, as it did last year.
In some of our analysis over the last few years, we've pointed to rising trends in things like service delivery protests, a decline in terms of service delivery from the municipal side, the police and intelligence services incapacity to deal with those challenges adequately, as we saw most clearly evidenced in the unrest in July 2021. What do you think going forward with those trends? Do you foresee an uptake this year? Do you see a bit of a lower ebb, perhaps, for businesses specifically dealing with those challenges? What do you think the year holds in store in that regard?
It's hard to see a way that that would lead to a trend reversal on these issues. So municipal dysfunctionality, I think, will continue, and businesses will have to face and continue facing the challenges that result from that. And that applies across the board, from water to sewage to roads to transport infrastructure, as well as, of course, energy provision, electricity, and so on. So it is going to be a challenging year for business. But at the same time, of course, also that has political implications, because so many of these services are under the control of the ANC. It is going to reflect on the ANC when those services continue to decline and break down, and also have an impact on employment and incomes in South Africa, as has been the case over the past 15 years or so.
Just looking a little bit at things from the global perspective, I mean, the scariest maybe stat that stands out, and it's easy to quote these numbers, but they have a real world effect on people. But the S&P 500 ended the year down 18%, which was the largest loss since 2008. And the only years with a larger decline since 1940 were in 1974, 2002, and of course 2008. What do you foresee maybe for financial markets, for stocks, maybe for equities, that sort of thing, for the next year or two? I think we can be confident saying that the Fed at least will continue to keep rates fairly high, maybe continue hiking at smaller increments, but that'll continue for the next year. But what do you see for sort of global financial markets?
I have a concern that there is some sort of crash coming into global financial markets, which may exceed the downturn that we've already seen in the US stock exchange, for example. And the reason for that would be a faltering of confidence in global markets, combined with continuing high energy prices because of the disruptions caused by the war in Ukraine, as well as continued and sticky high inflation. What I also see as a potential risk is that certainly in the US, for example, with the presidential election looming in 2024, the Fed is going to be under pressure towards the end of the year, I think, to drop rates in order to increase growth. So the Fed, I think, is trying to negotiate a very tricky path between keeping or bringing inflation down by keeping rates up on the one hand, versus high rates hurting growth too much, especially in the run-up to an election. That is certainly not going to be what the Democrats want. But we'll see how that plays out. My sense is that there's probably still some more pain waiting for global markets in economic terms. I think interest rates are going to be high, at least for the first half of the year. Maybe we'll start to see them coming down in the second half of the year.
And then just another global question, specifically on Europe, because it is one of South Africa's biggest export zones, biggest export markets. When Europe suffers, then our own farmers, our miners, other exporters, they suffer accordingly. What do you foresee for Europe? Do you see any quick resolution to the conflict in Ukraine, maybe some sort of palace coup in Russia, something a bit out of left field that might help resolve that conflict?
I think that's unlikely, but not impossible. And often it is precisely those kinds of developments that take you by surprise because you didn't really foresee them or expect them to come. So that could happen. But sort of I think the consensus expectation at the moment is that that war is going to drag on for a while longer. Both sides at the moment, I think, do not assess the situation as being one where all future paths are worse than the current situation. So both the Russians and the Ukrainians, I think that they can still do better than they're doing at the moment. So they both have an incentive to keep fighting. And they both are well-resourced. Russia is flush with oil money and gas money, and Ukraine is well-supplied by Western countries. So I think that conflict, unfortunately, is going to drag out for a while longer. As for the European economy, I think that is going to slow down, stagnate, and maybe contract this year under the influence of high interest rates as well as high energy prices and the disruption in energy markets.
And then, John, just to wrap up, I thought maybe asking you about one particular hotspot or one story that will jump out to you this year or that you think might catch people by surprise. For me, the thought of Japan, keeping an eye on Japan and where they go with sort of fiscal policy might be a good indicator. But if you want to expand on that one or anything else that you want to mention, maybe that people don't have on their radars that they should.
Yeah, I think Japan is a good story to keep an eye on. So Japan has been pursuing a policy of yield curve control, meaning that they kept the yield on their government debt artificially low at, I think it was 0.25%, so close to 0%, and have done so even as the rest of the world has started increasing interest rates and seen yields increase on government bonds. And that policy is going to be very expensive to sustain because it requires the Japanese central bank to keep buying government bonds to keep yield down. And that has a negative impact on the Japanese exchange rate, which we've already seen filtering through. And I think that at some stage, the Japanese government and central bank might have to deviate from yield curve control. And considering that Japan has such a huge debt pile of over 200% of GDP, as it's a huge debt pile, it will make it very expensive for the government if the interest rate on that debt increases. So I think that is certainly a story to keep an eye on. If yield curve control is abandoned and yields on Japanese debt go up, if interest rates go up in Japan, that is going to have quite a knock-on effect on global financial markets because Japanese government bonds are very widely held.
Thank you very much to Dr. John Endres, and thank you to the viewer, for joining us for this video. If you enjoyed it, please remember before you leave to like the video and also subscribe to our channel if you have not yet done so. We also invite you this year, if you are not yet a client, to become a client of the Center for Risk Analysis. You can look forward to weekly risk alerts, client notes, other research projects and bespoke projects that we can provide to you as you try to navigate the incredibly interesting country and global context in which we're all trying to navigate and make sense of. We thank you for supporting our channel, and we look forward to providing you with more content as the year unfolds. Until next time, this has been Chris Hutton for the Center for Risk Analysis. Take care.